Welcome to the world of home ownership. But wait, what's this mortgage impound escrow account that people are talking about when I buy a home? Well, in this video, I'm going to go over what is an impound escrow account and how it can make managing your property taxes and your homeowner's insurance a breeze. Hello, my name's Tyler Ford, Tucson, Arizona with eXp Realty, and welcome to another episode of Living in Tucson, your Tucson real estate connection. And in this video, I'm going to explain the mortgage impound escrow account. And sometimes you hear it referred to as an impound account, and other times people call it an escrow account. So if you've got a mortgage, whether you're a buyer getting a mortgage or you're a seller with a mortgage, this video's for you. I'm going to explain the mortgage impound escrow account. Okay, if you're buying a home and you're getting a mortgage, let's talk about the impound escrow account. And just a little side note, there's some people that don't want an impound escrow account and they want to manage their property taxes and their insurance on their own. What you want to do is you want to reach out to the lender and ask them if that's possible. Some lenders allow it, but they charge a premium. They're going to charge you a higher interest rate in order to be able to do that because it puts the lender at risk. So if you think about it, the way an impound account works is each and every month when you make your mortgage payment, you have your principal, interest, taxes, and insurance. And so how it works is your principal and interest is always going to stay the same. It's consistent. And then you've got your taxes and insurance. So when you make your monthly mortgage payment, that money goes into an impound account in order to pay your property taxes and your insurance when it's due. But if you want to pay those on your own, it puts the lender at risk because real estate property taxes, if you're not paying them, they take first lien position. So the lender could be wiped out if those property taxes aren't being paid. And if your property burns down and you didn't pay your homeowner's insurance premium, then it puts the lender at risk because when you get a mortgage, they're going to require the homeowner's insurance policy. The lender is what is called a loss payee for the replacement cost. So if something were to happen to the home, the insurance policy would kick in and then replace the home. So the asset is still there in terms of the collateral. So it's really important. The lender wants to make sure that they're protected, that the property taxes and the insurance are being paid. So each and every month when you make your mortgage payment, the principal and interest, taxes and insurance, the taxes and insurance go into an impound account, and that account builds up and then pays the mortgage company or the bank, then pays the property taxes semi-annually in Arizona. It's paid twice a year, and then your homeowner's insurance premium is annually. And so when you get a mortgage, they're going to impound some money up front to be able to have enough money in reserves to be able to pay that. So typically homeowners insurance, they impound 14 months because they pay the annual premium and then there's 2 months left over in that reserve account. And then same goes for property taxes. And property taxes, in terms of the amount that they impound, it just varies based on the time of the year that you're buying and when those property taxes are due. So you want to talk to your agent, or the escrow officer is the one that really calculates that, and the lender in terms of your estimated closing statement. You're going to have an impound account amount in there that when you get a mortgage, you're going to have to pay money into that account, so there's money available. So again, it's just an easy way to budget and manage, and it's something that you don't have to worry about. So each and every month when you make your payment, the principal, interest, taxes, and insurance, you have peace of mind knowing that your property taxes and your homeowner's insurance are going to be paid. And it's just an easy way to budget for it because you're paying it each and every month, although it's not being paid monthly. The principal and interest is monthly, and homeowners insurance, property taxes are not. So again, if you're a buyer out there, talk to your lender and they're going to give you a estimated closing statement based on the month that you're closing, and that is a part of the money that you're going to have to bring in to establish your impound escrow account. Something to be aware of is the lender periodically might send you a notification that they're going to make an adjustment in your payment, but your principal and interest, that stays the same. That never changes. But your property taxes and your insurance could change. So as home values go up or down, your property taxes could change. And as a result, your impound account needs to be adjusted so there's money available to be able to pay. So periodically, and the same thing goes for homeowners insurance. If homeowners insurance goes up, then again, your payment's going to change and you're going to pay more into your impound escrow account so there's money available. So just be aware, principal and interest always the same, but taxes and insurance could change, which has an impact on your mortgage payment. So there's enough money in reserves in order to pay taxes and insurance when they're due. Now I want to run through a little example and kind of show you how it works. So the example here, let's say you buy a home for $400,000 and you put 20% down. So your loan amount is going to be $320,000. And so based on interest rates today, let's say you're doing a 30-year fixed at 6.5%. Your monthly PI, principal and interest payment, would end up being $2,022.62. So the one thing you want to take a look at is an amortization schedule. So each and every month when you do your principal and interest, very little goes to principal and then a lot goes to interest. But each and every month that you make that payment, more goes to principal and less goes to interest. But your PI portion, the $22.62 is always going to stay the same. What changes in that, more goes to principal as time goes on and less goes to interest. And let's say your annual property taxes are $3,200 a year. Divided by 12, your monthly impound portion would be $266.67. And your homeowner's insurance, in this example, let's use $800 a year. Divided by 12, your monthly homeowner's insurance in terms of what's going to be impounded or escrowed into your impound account is $66.67. So your total PITI, principal, interest, taxes, and insurance would be $2,355.96. So again, the PI portion is always going to stay the same. Your property taxes and your homeowner's insurance could change, and as a result, it could then have an impact on your payment if the mortgage company were to do an adjustment. So that's a breakdown, and that's how it all works. Now let's talk about sellers out there. So this is a question that I get all the time, and a lot of people forget about this when they're selling a home. So when you sell a home and you've got an impound escrow account, there is a balance in there. And depending on the time of the year and property taxes, there could be more or less money. But when you go sell a home, there's a balance in there. And what happens is when you sell a home and you pay off your mortgage, the mortgage company is going to refund whatever the balance is. So one of the things you want to do is reach out to that mortgage company just so they know that they've got the proper forwarding address, because typically, and I get this question, how long does it take? Usually within 14 to maybe 30 days, you're going to get a check in the mail for whatever your balance was in your impound account. And this is kind of lost money that people forget about. So take a look at your statement if you're going to sell and look at what the current balance is. And it's a nice little bonus that a lot of people forget about that you're going to get in the mail when you go sell your home. Hey, thanks for watching this video. Hopefully I made sense out of the mortgage Impound escrow account. If you've got any questions, go ahead and comment below. If you got value out of this video, do me a huge favor. Give me an internet high five by liking it. And for more awesome real estate videos, you can subscribe to the channel. If you hit that bell button, each and every time a video comes out, you're going to be notified. In the meantime, make it a great day. Buying or selling a home is one of the biggest decisions you'll ever make. That's why you need a local Tucson expert real estate partner. With all the exciting reasons you have for buying a home, one of the biggest reasons is it can dramatically increase your family's wealth. So whether you're looking to purchase your first home, your next home, a second home, an investment property, or maybe you want to sell your home, choosing an experienced real estate expert to help you will make it a smooth and easy process. And choosing the right realtor can make the difference of more money in your pocket after closing. So whether you're a first-time home buyer or a seasoned investor, or maybe just interested in knowing what your home's worth, contact Tyler Ford and team today. Call Tyler Ford and team today at 520-775-3400. That's 520-775-3400.